Hi everyone, today I'm going to talk about the difference between property and stocks. This picture plays a very important part of my philosophy because this is MMA or mixed martial arts fighting. And to win a competition like that, you don't just need skills like Muay Thai or or boxing. You need a couple of skills. You need to have Jiu-Jitsu, Muay Thai, boxing combined, maybe a bit of kickboxing. So, like I said, to win a fight, to win a war, you need a couple of skills. So you can't just rely on one. It's the same as property and stocks. You need multi skills to achieve your goals. So there are three whys to success in life. First of all, if your why invest? If your why is not strong enough, you will not be able to find that strength or that persistence to succeed. And many people, perhaps from the second gen wealth, they were born with silver spoon and they were lucky enough to inherit wealth. A lot of them, I see that they do not have the same focus in life, the same grit to have this back to the wall determination to succeed. And conversely, people from deprived background or people who have maybe gone through quite a bit of difficulties in their youth, they tend to have a very steely background, very steely resolve to persist and achieve things. So the why is very important. Why are you doing this? Are you doing this because you want to have a better life? You want to spend more time with your family? You want to have options besides your job? You want to quit your job? You want to travel around the world? You want to do charity? The why is very important. It drives your behavior going forward. And persistence is what leads you to success. It is not your intelligence, brilliance. Yes, that's important, but studies have shown that persistence, grit, they are the biggest predictor of success. So why property and real estate? We'll address that, and why E&O and PVI mentorship, property value investing membership. Well, let's go back to why. What do you want to achieve in life? So from young, it's important that I had a vision board. And it's important that you have one. When I was in university, I started to paste all this. And the pictures could be what you want for your family, about the kind of car that you want to have. It could be a red Ferrari, it could be SUV, material things. You want to travel around the world in a yacht. You want to climb mountains, your family. You want to have very good health, a dream home. These are the things. And every time you paste it, the power of visualization will bring you to achieve what you want to do. And also important is to, whenever you have a problem, you want to find a way to solve it. What you should do is to look forward and look out for role models who have already been there and done that. And I was looking around for role models in the early 2000s, where I found that there's these two teachers, and they in UK, they were holding on a full-time job, but they accumulated 1,000 properties. And in 1995, they started accumulating over 20 years, 1,000 properties. You're looking at 10 years is 500 properties, right? So you're looking at 50 properties a year. That's incredible, right? So 10 years is 500, 20 years is 1,000. And they sold everything out in 2015 and have had 140 million pounds. They retired. So this is stuff that dreams are made of. And what if you have low starting capital? Well, you need the knowledge first. Always invest in yourself. I spend no less than over 50,000 US dollars on courses, but I do a lot of due diligence. I make sure that the trainer has done that. I've attended bad courses where the trainer claims to have achieved great things, like, for example, trainers that tell me they are very good Asian stock investors, but in the end, I think I probably lost about $300,000 buying Asian stocks in the 2010s onwards. So But of course, there are other trainers that did very well. In 2015 onwards, I started to focus more on US stocks and perform much better. So today I have mainly US stocks, 70% and 10% to 20% in Asia. So I've achieved 15 to 20% return per year. So invest in yourself, knowledge first, okay? Whether it's property or stocks, look for that guru, have been there, done that. Test for and look at their social media, what they have posted, whether it's come true, and look for the verified track record. Once you establish yourself as knowledgeable, number two, earn your credibility among your family, loved ones, and close friends. If you have integrity and you are knowledgeable, friendly, I think people will be attracted to you. There are a lot of people. There are three things that are important for success, okay? There are people with time, but no knowledge, okay? And no money. There are people with money, no knowledge, no time. Well, you will attract people with no time, maybe no knowledge, but lots of money. And you have knowledge and you have time, okay, but you have no money. And these are very good fit. Okay, so you can raise funds from people you trust and love and do proper legal documentation, or always honor whatever you have promised. Okay, even with $30,000-$40,000, joint venture partnership with friends can go a long way. And you can use that to buy properties as well. $50,000 to $100,000 partnership with one or two people, or you can even go alone. It is possible. There are many options to this. If you want to find out more how you can buy properties with $100,000, come to us. Click on the link and then we will do a one-to-one with you. So why property investing? Well, you can invest in stocks. And the thing about stocks is that if you have $1 million, you choose to buy stocks, 50% return in 5 years, you get $500,000 profit. Total net worth after 5 years is $1.5 million. Okay. Now, but if you choose to buy properties without leverage, without mortgage, you incur 5 to 7% of taxes, you are left with $930,000. So 50% return in 5 years, $1.395 billion net worth, worse than stocks without leverage. So like I said, real estate, very slow. Transaction costs are super high most of the time in many countries. Without a mortgage, it's really not worth it. You're better off buying stocks. But the power of properties, you can do leverage, mortgage. And you buy 4 properties using leverage, 75% loan to value ratio, 930,000 divided by 0.25. You can buy $3.72 million worth of properties. A 50% return in 5 years gave you $5.58 million of assets, minus of your original debt of $2.79 million. You get achieved $2.79 million of net worth. So you achieve 179% return on equity. So unlike stocks, you are unlikely to get margin call if you are cash flow positive. So it's very important. Once you mortgage, the type of properties you buy must be positive cash flow. That means the rental yields must cover the mortgage. So is Singapore suitable? Well, Singapore is good for capital appreciation, poor for cash flow and rental. So this is something that you have to be careful of. And there are many countries that give you high enough rental yield after your mortgage. So look out for these places. So the difference is, of course, what other differences are there? Well, if you buy an Apple share for stocks, you cannot tell the management what to do. You can go to the AGM and say, oh no, you should have a flip phone for Apple, but I don't think you have much of a say. You're just a passive investor. But in E&O, we'll teach you how to create capital growth, extend the back, for example, of the house, add square footage, dress up the property. And then, property has less price fluctuation. It's very hard to, it's not because property is a better asset class and stocks, it's just more stable. Why? They do not drop as much as stocks. In 2008, property prices in the US fell by 30% from peak to trough. S&P fell by 56%. So in 2020, again, S&P fell by 36%, while property prices did not fall at all. It's just the nature. It's very easy to sell stocks. Just click of a button. But properties, you take a long time. You need to find a buyer. Very liquid. So interest rates are low. You should not leverage on stocks unless you're very skilled in risk control. But you can extract all your money out of a property and yet control 100% of it. So the beautiful thing is that because of the leverage, you can put in $100 and control $400 worth of assets. Again, this works very well when interest rates are low. And if you need to have high cash flow, a high enough rental yield to cover your mortgage. You can use other people's money to buy properties and split the profits. In Singapore, if you manage other people's money to buy stocks, you really need a license. But in property, you don't need to if it's kept within a certain constraints. Okay, stocks, instant feedback, low entry level, small profit in the short term, huge profit in the long term. Well, buy and hold, you can achieve 10 to 20%. Of course, I run a fund, the global equity index, and I'm aiming for 15 to 20%. So far, we have achieved that, about 20% US dollar terms per year. But property is not a business. It's not passive. You cannot get by without talking to people. So if you like interaction, it is important, it is good. It hones your business skill. It's pretty good to be in a property business, and you become a people business. And there's a higher entry level. Over the long term, huge profits is like the bamboo shoot where you grow the plant and you don't see it grow up, and 5 years later, suddenly the bamboo shoots spring out and then they bloom flowers. It's like that. You don't see mark to market every day. You don't get instant feedback, but you can get pretty good returns, 20 to 60% per year. And you can control your outcome a lot more, because you can, especially with landed properties, you can refurbish, you can add a lot of value to your property. So you get a lot of control. So returns between stocks and property, over here the lowest part is properties that are unleveraged. This line here, let me show you over here. Now this is without leverage, and the returns are only about 3% per year. Properties without leverage, because minus all the transaction costs and all that is not is actually not very profitable. So next, the blue line is if you started with $1 million, after 20 years, you'll end up with 2.55 million. Now, next one, the blue colored line is SG property leverage, 50% loan to value ratio, no rental. Your returns jump to about 8% per year. If you live in and there's a 50% leverage, 8% return per year. So 3.869 or 3.87 million, okay, 3.87x in 20 years. Now the S&P 500 is very volatile, but over a long term, 20 years, returns are about 11% per year. So you can see that your own home with no rent is actually inferior to S&P stocks. Now let's go on to the more high octane one. In over here is where you have a 50% loan to value ratio plus rent, and it increases to about 14% per annum. And 1 million turns into 12.8 million in 20 years. Pretty good, right? So why I said 50% leverage? Because in Singapore, 50% leverage just about cover your mortgage payment. Is a lot safer. Now, if you go very high octane, you got a very good career, you're negative cash flow, who cares? You're making 20,000 a month, 30 or more, then you could achieve 25% return per year. And $1 million would have turned into 76.28 million. 76x if you do 75% loan to value and rental. Okay, so leverage is high octane. This is very risky, but there are countries like the UK where the rental yield is 5 to 6%. Borrowing cost is about 6% right now. It will, on average, is about 5. You are cash flow neutral to slightly positive, and yet you get about 5 to 6% capital gain. So that achieves the goals. So there are a lot of countries that you can achieve by be open-minded. And herein ends my presentation. The next one I will talk about the characteristics. What do you look for real estate that is liquid and make sure there's demand? So because when you buy, you need to look at the window to sell. I'll see you in the next one.